Hello, everyone. Thank you so much for joining me for today's Zoom call. Today, we're going to be introing you to Ed over. Ed, how do you pronounce your last name?
It's Einbinder.
Einbinder. Thank you so much. Ed
You got it.
Einbinder over at Newbridge. We use Newbridge for a lot of commercial deals. So I'm just going to kind of let Ed take it from here so he can tell you guys all about how you could use Newbridge on your bridge deals. And we'll have a Q&A at the end. So Ed, you have screen sharing ability if you want to do that, or if you want to just talk straight from the camera, you have it.
You got it. Thank you, John. So, once again, Ed Einbinder, Executive Vice President of Production nationwide for Newbridge Commercial Lending. We are direct bridge lenders nationwide, every state but North and South Dakota. Okay, bridge money on commercial real estate, mixed use, multifamily, light industrial, warehouse, office, retail, self-storage, and mobile home parks. Those are our core 8 asset classes that we finance. We also have the availability to give rehab funds, light to moderate. So we do bridge money, and our model is about vacant, unstabilized, as well as stabilized properties. So we do the whole gamut, whether you're repurposing a property, whether you're acquiring a property and want the rehab funds too, because we'll give you up to 75% loan to cost off of that rehabbed, or as we call it, stabilized value, 70% off of the as-is value. So technically you could get 70% off a vacant, unstabilized retail shopping center. The key with us is our model is for light to moderate rehab, but at the end of the day, we're seeing as many bankable transactions right now as we are seeing non-bankable transactions. And
Elaborate on that. Why do you think you're seeing a lot of bankable stuff right now? I know the market's kind of moving around right now, right? So maybe they're not debt servicing anymore, or what is the reason?
So that's a great question, and there's a variety of reasons. The number one reason that I'm noticing is, more savvy investors are saying, hey, look, we've reached the pinnacle more than likely. Yesterday's Fed hike was probably the last one you'll see for quite some time. I think they realize that, we're at a 17-year high right now. We haven't seen these kind of prices in 17 years, these rates, and that, they're doing significant damage. You have a tremendous amount of commercial real estate in the CMBS world that's going to mature this year. How's it all going to debt cover at current market rates?
It's not going to
it's not going to. So either the loan workout business is going to get very busy, or there's going to be some people going into serious situations on properties. Something's going to break, and I don't know what that is, but we're seeing, as I said, a lot of bankable transactions. Why get caught in a high 5, 7, or 10-year fixed rate or SBA loan now that has serious prepayment penalties, when I can take a non-recourse interest-only loan where the payment's almost the same as maybe my bank transaction would have been, without none of the DNA extraction, the pain that goes with a full underwrite with full recourse. There are no financials required on our non-recourse loans. We don't even pull the borrower's credit. It's a LexisNexis background search. That's it for the owner of the entity. These loans don't report to credit. And why get stuck into that long-term loan at current market rates? And at the end of the day, what they're doing is they're hedging themselves that, hey, we do 12, 18, and 24-month money. Let me take the 12-month money, and I'm sure, and most feel that way, that there should be some rate relief next year, especially at the commercial banks.
Right. So you think they're pulling cash out to kind of survive in a way, or what are they going to be doing with that cash out? Or Or they getting these adjustable rate mortgages, they're starting to adjust all of a sudden and then coming into to seek the new
Well,
bridge financing. Is that what you're seeing?
yeah, no, well, what I'm saying is, savvy investors that want to acquire properties right
Right,
now are doing
right.
not to be stuck. And loans that are maturing, okay, and some are being called because certain financial institutions are saying, hey, we're too top heavy in office, or we don't like the thought of the mouse and the clicking and buying and Amazon, so we're being hawkish, I should say, very, very conservative on retail. Now, we made our first conservative move about 2 hours ago, where we reduced our loan to value on office for the simple reason we're a portfolio lender and we were getting top heavy in that asset class. And there's a lot of scrutiny on it, especially since COVID. More so on the large scale office facilities, we play in the loan amounts of $500K to $10 million. So we are on those 8 asset classes, I should say on 7 of the 8, we're at 70% of the as is, 75% loan to cost. And on office, it's 60% with 65% loan to cost, as of about 3 hours ago. We are extremely transparent. We do not take any upfront fees. Okay, we do a lot of work on our time and dime when you submit basic information. And I tell people our page 1 of our app is a great, it's great to utilize that as a interview form via the phone. So if you're sitting in Texas, you're sitting in, Chicago, and you're doing a loan in Florida, and that's where the borrower is, the questions on there make you sound like a 50-year seasoned pro at doing commercial. And on top of that, it's the pertinent information that gives us the ability to give you very accurate and fast responses. We issue, I just issued 2 LOIs from my corporate office in California, both of them in less than 30 minutes. Page 1 of my app, a current rent roll, the projected rent roll for this vacant 10-unit apartment building in Chicago, the operating expense statement, and a detailed budget for the rehab he wanted to do, along with the executed purchase contract.
What's your minimum loan amount?
$500K.
500K. Okay.
So the initial disbursement must be at 500K. We can't have a loan that, the initial disbursement is 400, but when you throw the when you throw the rehab monies on top of that, it comes out to 680. Or we don't even advertise 500, but we do it as a courtesy. The advertisements will say 1 million. So some other neat little things, there is no appraisal up to $2.6 million.
How do you evaluate it?
Site inspection, and the most important factor in valuation commercially is the income approach, as opposed to residential where it's comparables and sales and comparison approach. So we're going to go by an income approach first and foremost, and obviously the joy to that is the fact that 442 Main Street, downtown Denver, determines what a square foot should go for in that market. Not Newbridge, not you, not the borrower, not the appraiser. So it makes it a lot easier. So the key is we go there and touch it and feel it to ensure, hey, it's 50% occupied. Like he said, there's no major issues that we saw when we inspected it. So his budget looked to be in line. It only needs about 30 grand in lipstick, and we're off to the races. And one of the other thing is, we hold those rehab monies and we disperse as the work is completed, and we reimburse either the borrower or the contractor directly. And there's no fees for that. We're as a true portfolio lender, we are We don't charge for that. We don't have servicing fees monthly. And as I said, our loans are 12, 18, and 24 months. We have a pretty neat product as it pertains to technology on our website.
What determines the 12, 24, 18, and 24 month term?
So that's really yours and the borrower's choice, with one exception. You send us a property that's 100% vacant, excuse me, and requires substantial rehab that's going to take 8 months, and you're requesting 12-month money, we're going to be like, hey, John, this doesn't work.
Not going to work.
You need to go 18 months here minimum. It's going to take you 5 months to lease up this 100 unit retail center or multifamily. So
how do you feel about owner occupied? Let's say it's owner occupied, or it's going to be owner occupied. Is there restrictions there?
We've got a phenomenal, extremely aggressive program called an express bridge. Don't confuse the express part with same amount of time it takes to do a normal bridge, which is normally 18 to 24 days. The express bridge gives you the availability, and I just did one for 9.8, actually is $10 million in South Carolina. And the broker made $350,000, and you'll know why in a second, because that product basically, to my knowledge, doesn't exist. Up to 60 LTV, we will do non-recourse, no financials, not even Polish credit, on a single tenant owner occupied scenario. And in the scenario that I just mentioned, or the deal I just mentioned, that particular deal was a modular manufactured home builder in South Carolina. They did not have time to wait 6, 7, 8 months for an SBA loan. Okay. And they needed $6 million working capital immediately so they could start processing orders. They had over $50 million in outstanding business, but they couldn't do it without the working capital. And as a matter of fact, that loan just recently paid off. So the broker got 2 deals out of that. The first one, where we made a real nice haul. And, we did another one like that, standalone restaurant, bar, and grill in Manhattan. There's many, I can go on and on.
Tell me about the broker compensation, and like how can they charge fees into the loan?
Sure.
Can they do yield spread, or is it strictly origination? Do they have to match what you're charging, or tell us a little bit about that?
So it is uncapped. So God bless you if you can charge five points and get it. We will protect you, and we will not cap you. You have your fee sheet with your customer. On our letter of intent, you'll see our 2% fee and our doc prep fee, of which we take none of that until the closing table. So we're working on our time and dime all the way up to there. When we issue a letter of intent, that deposit we take after they execute and sign the LOI is for their valuation, for their property valuation, not us. And by the way, there's another very transparent, borrower-friendly thing we do. We reach out to an independent group that we have nationwide of appraisers, MAI commercial appraisers, who either are doing the site inspection, or if it's over 2.6, a full appraisal, and then the deposit becomes $5,000 instead of $2,000. And we get bids, and the best quality one out there in the least amount of time, who's the least expensive, is the one we go with. Any dollars left over are refunded as a credit to the borrower at closing. If the loan, for some bizarre reason, they decide to cancel, or something pops up that we weren't told about, and the deal is now deceased, well, then they would get back whatever dollars are left over and a copy of their appraisal or the money spent out of that deposit.
So it's an appraisal fee deposit.
Yes, and it pays for their valuation, which we order immediately when the signed LOI comes through our door and the wire hits.
Okay. What kind of responsibilities do you have for the broker? Sometimes lenders like to handle all the title stuff, all the insurance communications. Other times it's on the broker, which is just fine. Tell us a little bit about the broker responsibilities and the roles that they have when they're closing with Newbridge.
So most brokers love the fact that we don't force you to use a certain title company. So you can keep your title relationships. It's your responsibility to order as well as insurance. We will, after that LOI and deposit hits our door, within literally the minute the wire hits, within 40 minutes, you are, as a broker, are notified electronically, along with myself, or you're dealing with one of my sales managers. I have 6 sales managers throughout the country that report to me. They're notified, deal is in process, and we're off to the races. Within 24 hours of that wire hitting, the broker would get an introductory email from our underwriting processing team in California that gives them a stip list. We call it a needs list for their transaction.
Mm-hmm.
And
so the broker's in full control of the
yes,
borrower. You guys don't
he's
ever
your
talk.
client. Yes, the broker is our customer.
Mm-hmm.
The borrower is your customer.
That's great.
And if that, there's no circumventing, they can't come back to us. If John's borrower came back even 7 months from now, hey, can I do this or that? We're gonna revert him back to you. Or for some reason in process, hey, I don't want to deal with him. Well, you control the deal. It's in the system under you. Right, and until you tell us no longer dealing with this customer, it's a dead deal, that's when that loan would be eliminated from our system.
On the initial term sheet and all that, it sounds like you have almost the wholesale set up. However, is there white labeling enabled for your guys' loans at all? What about initial terms, things like that?
Yep.
If, my broker presents a term sheet, they see it's Newbridge, then they run off to Newbridge. Can you tell us about if you have any white labeling or any kind of, how does that all break down?
So we have a white labeling program. It's the broker's responsibility to white label it if we approve you for that.
Okay.
We always require someone to close 2 to 3 loans minimum first.
With you?
Yes.
Okay.
So that we can ensure you're a good fit for us and we're a good fit for you. And I can only tell you, since we reopened and became a portfolio lender independent 2.5 years ago, and we've done about $500 million since, a little more than that. Obviously we were inundated with white label requests.
Yep.
And, we heard the story, I'm going to do so much business. And, I deal with hundreds and hundreds of people throughout the country. I can't begin to tell you. So do my reps. And to date, I can tell you that less than 5 really, and really out of that 5, only 1 has held true to those colors. And it's really the only true table white label we have now with us. But we do allow, we kind of changed it. We used to hand it out a little more readily. Now it's, hey, look, you got to fund. This was the bank president's doing about 12 months ago. You got to fund at least 3 deals, because we found some people were like, oh, my gosh, this guy wants to table fund with us. And, he or she,
they don't know what they're doing.
Yeah. And it really made for a muck of the system. Yeah. And, there's some responsibilities, because if you decide to do a full recourse deal with us, and that's the other side we didn't finish on the owner occupancy.
Yeah, go for it.
On owner occupancy, if you need more than that 60 LTV with better pricing, and you can get it up to 70 to 75%, but then that requires the 2 years financials and a PG if it's owner occupied. And what do we consider owner occupied? When you occupy more than 20% of the subject space, or you are the lion's share of the rent roll. Mm-hmm. So you're in a 4-store shopping center, and maybe you only occupy 10% of it, but your rent's the highest one on the block, in the strip. So that's in that case it would have. Now that doesn't mean we wouldn't do the loan if you didn't globally cash flow the payment. It just would determine that, hey, we're going to still do Mr. Smith's loan. We just have to hold reserves now. And that kind of leads me into another item. We have a neat niche with underwriting and reserves. Whenever the property currently has a 1.0 or better debt service coverage ratio, regardless of current vacancy status or occupancy status, so it could be a 50% occupied apartment building, but the DSCR is at 1.1 or 1. We don't hold any reserves.
Okay.
Let's say it's at 0.6. We just take that 0.4 difference, and if you take 12-month money, we times it by 12, and that's all we hold. Most private bridge lenders are going to hold, regardless of DSCR, full 12 months upfront payments, whether you like it or not.
Right. And the reason that is, everybody, the reason they're holding those reserves is because your property is not cash flowing, and this is a short-term note. So they need to make sure you're going to be able to make payments on those loans. So that's why they hold back those reserves. So if they're 1-to-1 with no reserve requirement, that's phenomenal, especially considering all the other bridge lenders are going to be holding back.
Yeah, regardless.
That's all really good. Well, how would someone submit it? What's like your ideal initial submission? I know I heard you mention some applications, some docs, but what's your ideal submission initially? Maybe an email. What do you want to see to have the quickest response? And then how quickly can you turn out a term sheet, assuming you get everything you need?
Literally the best thing is page 1 of my app, which takes less than 5-6 minutes to complete. I mean, at the top goes the broker information. It's all self-explanatory. Then comes the property information. Check off the property type. Check off recourse or non-recourse. Go to the left side. What entity owns the property now? 452 Maine LLC. Great. Then you go to the ownership section below that. Owner of the entity's name, Mike Smith, 50%. Karen DeVito, 50%.
Sure.
And then if it's a non-recourse, you'll see estimated liquidity and net worth. I don't need a PFS. Hint, hint, we're not verifying that, so don't look the gift horse in the mouth. Right? Now you go over to the other side of the page, loan amount requested, as is value, stabilized value. Right below that, when did they buy it and what did they pay for it?
And you can get a response to us on what you can do just from that?
Oh, absolutely. And if you accompany that with a current rent roll and or a projected rent roll for the vacant units and an operating expense statement, you'll have a formal letter of intent from my inside, sometimes in less than 30 minutes. And if there's rehab, add the budget with a draw schedule. If it's a purchase, add the executed contract. And I'll one better you on, and this is what I was talking about technology earlier. We have something called a loan qualifier on our website, which is to commercial, as I tell people, what DU was to residential underwriting, desktop underwriting, to give you a pre-approval so you can go to the open house. You go on our website, it's open to the public. It's like 7-Eleven, 24/7, it's open. You hit in the loan identifier box, you can write anything you like, the city it's in, check off I'm not a robot. Property type, gives you the list of asset classes we do, check it off. Zip code, boom, because we do tertiary markets, rural markets.
You'll do rural markets
all day long, and that there'll be a slight LTV hit, dropping it down to 65% on rural markets. Then you'll go below that, and it'll ask you loan amount, appraised value, excuse me, are you going express or regular bridge? How did you hear about us? We like to know how our marketing dollars are being spent, where they're going, if they're working or not. Is it a rate and term refi? Is it a purchase? Is it a cash out refi? Boom, check off 12, 18, or 24-month money. You want to go full or non-recourse. And then below, there's 6 questions, just check off no's, and a blue button will appear on the upper right side that says calculate. And you could be sitting by your pool on a Sunday afternoon and know, hey, wow, I have a deal on a vacant warehouse in Ames, Iowa. I could call that on Monday. I already know it works.
Does it quote the terms?
Oh yeah, it will give you your exact rate as of May 4th, 2023. And you know already we charge 2, so you can go to work on your borrower right then and there and get them off the street from shopping.
Okay. Well, I'm going to open it up to questions if Trey has any questions. But I got one more before that, and then we'll find out how to get a hold of you and all that. So
Sure.
Yeah, the next question I had for you was, do the brokers have how workable are your loans? So if I don't know if you have a prepay or whatever, or is there anything to work on the deal? If a borrower has an objection over anything, can we work it out?
Sure. So everything is up for negotiation. I will tell you that in this current environment, the easiest flexibility we have is on the prepay. Rates got ugly I don't have to rehash what's going on. If we were having this conversation 14 months ago and you said, Ed, where do you price out? I would tell you 7.99 to 9.9.
Yeah.
It's now 12 to the 14% range.
Right.
Don't shoot the messenger. You can talk to the people in Washington. But we as portfolio lenders, I can tell you 2 items. And number one, we're immune if another COVID outbreak happens or panic sets in the capital markets, because we don't have to sell our loans. We're a portfolio lender. So we hold them, which we weren't previously. And that's why we got away. And now we do what we do. And it's given us we opened up in the heart of COVID. On top of that, the only thing I can say we're not immune to is the pricing, okay? We're extremely transparent. And I have to tell you, I sat on a panel I speak at a lot of trade shows, and I'm at one at Citi Field where the Mets play in Queens, New York, this Wednesday. It's the New York Real Estate Expo, all non-bank lenders. And I sat on a similar one in Atlantic City, New Jersey back in, I want to say, November. And we had made some temporary changes, maxed our loan amounts out to $9 million and adjusted because there was a lot of uncertainty where the market's going. But we're more confident now as we think we're at the pinnacle of where rates will be. So temporarily we said, hey, let's curtail. We don't know where this is going, but we were open about it. I was trying to help a few brokers, and I asked a couple of guys on the panel that say they go to 25 million. Hey, I got a bunch of deals at 8, 7, 9. Will you call this broker, help him out? He's a good guy. I was trying to just help some of our customers. And every single guy on the panel said, Ed, don't say anything, but we're really not lending right now. Right. So, excuse my French, but I said under my breath, what the hell are they sitting up here with me for?
Why are you talking? Yep.
So what I can tell you is we will be transparent in that realm. And I think we put our money where our mouth is by not taking upfront fees. And once again, the only upfront fee, it's not ours, it's theirs. It's for their valuation.
Mm-hmm. Great. Okay. Does anybody have any questions?
Sure. Do Ed, thanks for jumping on. I appreciate the time. Give us some information.
You're welcome.
My name's Trey Sublette. I guess a couple questions would be, you mentioned a second ago on the online app, you had to denote between Express and regular bridge. What's the difference?
Yeah, so Express is primarily and don't confuse it, they both take the same amount of time. Express, the niche of that product is to utilize when you have owner occupancy, like a single tenant owner occupied, and he or she does not want to show a thing, or they know it'll get ugly if they show their financials, they'll have to have a boatload of reserves. This enables them to do it up to 60 loan to value with no questions asked. And you'll see the difference on the questions asked at the bottom of the loan qualifier. There's
Okay.
like 6 when you go normal bridge, and there's only 1 on express, which is, are you have any backed real estate taxes? And remember, we do maturity defaults. If you're backed up on your real estate taxes, we entertain all of that. We have no problem if your current lender hasn't accepted a payment over the last 12 months. We would just tell you, hey, I hope you were conscientious enough to put those payments aside, and we'll get you out of this guy. We won't let him hold you hostage.
So either the financials are not great, or they can't prove they made the mortgage payments the last year.
Well, we always ask for a 12-month mortgage history.
Okay, there we go. Okay, that answers.
So,
okay.
And that could determine an effect to your pricing. And just because you had some missed payments doesn't mean we're not going to make the loan,
Okay.
or because there's a variety. It depends on the reason. The key with Express is to remember it's a true asset-based loan, and its real niche is for owner-occupied properties.
All right, great.
Owner-occupied. But if you have that owner-occupied property that needs a higher loan to value than 60, you go normal bridge, and then we just need to see the financials with it.
Okay.
But a current rent roll will tell me immediately whether I will need them even at 70%. I get plenty of deals where I see the square footage, or they're not the lion's share of the rent received, and we put them in the bridge and they still go non-recourse, even though they have an office or they're one of the retail stores.
All right,
Okay.
we got 2 more minutes, so any Q&A, just rapid fire if you
All
can.
right, real quick. Then how about hospitality, like hotels?
We used to do them, no longer.
Okay, no longer.
We got away from them.
Cannabis.
No.
Okay.
Everybody likes to
Nope,
smoke it.
You're
Nobody
right. You're
likes
right.
to
No, let's
finance
keep
it.
going. It's true. The rapid
Yeah.
fire.
So I work a lot of affiliates across the country, and that's why I get these every day. So I got a rapid
Excellent.
fire. So okay. No, I just want to make sure what's important to me is the nice, easy flow to get something submitted for review, get feedback fast, and if it doesn't work, it doesn't work. So last thing I have is, if you were to narrow it down to your favorite type of scenario to work with, which would be what? Like one thing.
Listen, one thing, fast and easy. An express program on a single tenant owner occupied, or a rate and term at 70% on a multifamily. He needs cash out right now, max.
Okay.
We don't
Right.
limit cash out.
All right. Awesome. Thank you, Trey. We're glitching out over here. I don't know if you guys see the same thing I am, but all right. What are you doing? What are you doing to his visual? Well, anyways, just to wrap it up, Ed, how do people get a hold of you? This recording is going to end any minute now. So go ahead and tell us how to get a hold of you, and I'll put your contact information below and all that.
It's Ainbindr@newbridge.com, 516-738-4864 is the office. And it also carries over to my cell, or you go to www.newbridge.com and you get to see my wonderful mug on the website with all my contact information.
Wonderful. And Ainbridge, spelled AIN.
Newbridge.
BINDER.
Newbridge, NU Bridge, and Ainbindr is AINBINDER.
Wonderful. All right. Well, thank you so much for